Have you hired an employee or a subcontractor? Are you sure? Are you willing to bet thousands in payroll taxes on it? Employee versus subcontractor classifications is a surprisingly risky tax area, and disputes often pop up when former workers look to claim EI after being laid off or when looking for parental leave. To make sure you are protected, let's break this down so the common tax traps don't catch you in a snare. When you have an employee. How you treat people matters. If you treat a worker like an employee, the CRA will treat them like an employee as well. Providing tools and equipment, training and oversight, and setting the worker's schedule like start and end times are all indications of an employment situation. These behaviors tell the government that you exert a high amount of control over the individual you've hired. Are you paying your workers hourly? Or is their contract indefinite? Do you send them a paycheck at regular intervals every 2 weeks? Again, these are all signs to the CRA that you have an employee, not a subcontractor. When you have a subcontractor. How independent is your worker? Do they provide their own tools and equipment? Are they only expected to get the job done rather than show up every day from 9 till 5? Do they act like a business and advertise their services to others? Do they have a GST HST number? Do they send you invoices to pay? Do they set their own rates on a job-by-job basis? Can they lose money by working for you if they don't quote well? Again, how you treat people matters, and how they act matters too. The CRA will determine employment versus subcontractor roles based on the behaviors you and your hired worker display. If you designate your workers as subcontractors, but CRA decides they are employees, you could be on the hook for EI and CPP payments since the beginning of that worker's employment term with you. And that audit bill could be in the thousands of dollars. How to protect yourself. Nasty arguments with workers around tax deductions and employment insurance eligibility can pop up when the employee-subcontractor relationship isn't clear. Because CRA can hand you a bill in the thousands of dollars for each worker you misclassified, keep a few things in mind to protect yourself. Number 1, treat them like their classification. Only provide training, oversight, tools, and equipment to employees. Subcontractors should take care of their own needs. Number 2, ensure your subcontractors act like real businesses. Do they advertise their services and have a GST HST number? Do they provide you with an invoice to pay when job mile markers are met? Do you pay them on a job-by-job basis? Only employees should be paid set hourly rates at regular intervals. Number 3, have signed documentation. Craft an employment contract or subcontractor agreement for everyone you hire. A lawyer can be of great benefit here. A well-drafted contract can protect you in the event of a payroll audit and may save you thousands of dollars. When you aren't protected. In industries like construction, it may be common practice to blur these lines. Employers often hire apprentices or general laborers as subcontractors, but then treat them like employees. Not only does this mean you miss out on apprentice tax credits, but it can also open you up to significant tax and audit risk. Common industry trends won't protect you if your behaviors don't line up with CRA expectations. Instead, make sure you've implemented the tips we've discussed to protect yourself from a nasty audit experience. Okay, that is all I have for today on employee versus subcontractor relationships. I hope this video helped protect you from a payroll audit. I will see you in another video. Bye for now.